Well, good afternoon, good morning, good evening, wherever you are in the world. Welcome to our latest series of webcasts. And today we're talking about the case for precision accounting. And this is about illuminating the blind spots in end-to-end processes, which is an intriguing title. So thank you for joining us today. So first of all, let me just introduce ourselves. I'm the one on the left. I'm Dan French. I'm very pleased to have with me here all the way from California in London town, Steve Fox, who's our process excellence leader and a former VP of Global Business Services at Thermo Fisher and a controller at some of its forebears. Yeah. Welcome, Steve.
Yeah, very good. Thanks, Dan. Great to be here.
So that's the two of us, and we are now going to be talking about this topic. We've got 30 minutes. I want to talk a little bit about accounting, visibility, and completeness, and how visibility and completeness affect accounting, but it's not necessarily an accounting responsibility, if you like. And then Steve's going to share some of his experiences on this whole issue of blind spots, where they occur and what the impact of them are on financial and operational performance. And then we'll come back with some closing thoughts and key questions, and maybe more importantly, key things you can do to start illuminating these things for yourselves. So to get going, I mean, it's kind of interesting. We've had, the modern accounting has been going 600 years, and this little chap, Luca Pacioli, did a good job coming up with a way of working out how to kind of manage complex businesses and this idea of clarity, control, and reliability and assurance. But really, it was all about balancing what came in and what came out. So, he was the, if you like, the originator of the balance sheet. So it's been going a long time, and occasionally we have little improvements, as we all know. But it's interesting when you think about clarity and precision about business operations and about what we're accounting for. This is an image. I asked, it's the first time, by the way, that ChatGPT has ever been able to produce an image I wanted on the first prompt. I'm not sure it's because it's getting any better. I just might be a little bit more specific. But what I was looking for here is two pictures of the same scene, but one slightly obscured. So they're both accurate representations on the left and on the right. They're accurate representations of what you see. But the one on the left isn't complete. And so if you look at the one on the right, you can see more things about the source of the waterfall, that river going back. And this is really a metaphor for the whole issue we're here to discuss around business operations and accounting, and what we can see and what we know and what is really there. So I'd ask you to use that image in your mind, because I think we'll come back to that. You've got to ask, why does it matter? Because, in all our businesses, ultimately this comes down to financial results. It comes down to the P&L. It comes down to our assets and liabilities, and are they all in the right place? Are we, our revenues and our costs? And ultimately, lack of visibility affects all that, as we will discuss. So it's kind of an important topic, and I think we probably all know there's some areas of where we have less visibility than we'd like to think we do, but this is really about bringing it into stark relief. And many of you, if not most of you on this call, are either global business services, shared services leaders, or accounting leaders. And as a result, I'd like to just reflect a little bit on this, in that these are the aspirations from various surveys we've done about global business services leaders, not about what the targets are or what's expected, but what you aspire to. And a couple of the key ones here are developing an enhanced reputation as a value creator as well as a cost reducer. And this idea of the center of excellence, the expertise to optimize and automate, and this end-to-end business process view, this business process collaboration. And what we're talking about today is all about shining a light to across the end-to-end process to create value. So this will probably come back to your thoughts as we go through. So without any further ado, I'm going to ask Steve. So precision accounting, what's it all about, and why does it matter?
Yeah. Thanks, Dan. And so just to, before we kind of dive into the detail here, I'd say kind of the genesis of this idea and this kind of the stream of, well, start as a stream of consciousness between Dan and I over kind of the holiday break, and this idea of, hey, there's a lot of details, there's a lot of things that go on in end-to-end processes, and a lot of things that happen within our businesses, and that not nobody's not trying to be as precise as they can, right? But what we kind of centered on is the fact that there's, it's much less, a lack of precision. It's more overture of blind spots, right? As we talked about, things that you either can't see, kind of look at this person on the left here, like this person, you can see the start of things, the end of things, but there's details, there's things in the middle that are a mystery, right? Because of the vantage point, because of the perspective. And I would say, when we think about blind spots, a lot of times, the idea is, we just don't know, right? Or just don't have no idea because of the siloed nature of things, or the handoffs from one system to another. But I'd also put this out there, and I would say in full transparency that I was guilty of this, right? Over the course of, kind of almost 30 years as a practitioner, is that, some of my blind spots were a tendency to ignore something that was maybe overly complex or difficult to understand, or maybe the outcome wasn't going to be a pleasant outcome, or the detail was definitely underappreciated. And so when I think about blind spots, I think not just the things that you absolutely have no idea of, right? Can also be things that just based off where you sit in the organization, right? Even hierarchically, that you're not going to have the ability to or the time, right, to see some things. So as we talk about blind spots, they can definitely impact the P&L and balance sheet. And you can see this example here, right? Pretty toned down P&L, but the highlighted items, these three lines right around revenue and SG&A and margins, et cetera, those are the headline grabbers. Those things get typically get a lot of visibility at this level. But underneath here, and maybe not one level underneath of transactional detail, it could be 2 or 3 levels underneath. Those underlying details, there's a ton of them, right? Think of sales order transactions. Think of purchase requisitions, to POs, to receiving documents, to invoices, right? There's a lot of transaction detail under here. And those individual items in and of themselves may be trivial, and in most cases they are, but the aggregation factor around these things can make them, I'll say, a lot less trivial, not to the point of material restatements of financials, but definitely to the point of, hey, I'd love to understand more about this, and if there's some working capital goodness or some P&L goodness I can capture, I want to do that, right? And so nobody's going to argue with the fact that details matter, right? I mean, we all know they do. But I say the reality of it is, and the things I've learned around this is, not all details are created equally, right? And the ones I want to focus on and prioritize, and I want my teams to focus on and prioritize, are the ones that impact the P&L and really drive and can drive some tangible goodness. And so to expect someone or someone's, think of a team in the order to cash space or in the record and report space, to understand everything across that spectrum of that process, that's not reasonable, much less for one person to. It's definitely not reasonable. So that's why this idea of prioritization, and let's focus on the details that really matter and really move the needle from a P&L and or working capital perspective. Let's spend our time there. And so to kind of pivot a little bit to this idea of precision, and you can see the textbook definition on the left, but I'll tell you, the way I've kind of thought about this to make it a little more real, at least in my experiences, how many times have we been sitting there? Have you been? I know I've been a way more than I care to admit, sitting in a room, we're talking about a process, right? And you've got folks kind of all over the board organizationally sitting in there, right? And typically you got somebody that will know something at a pretty detailed level, and that's almost always never the most senior person in the room. It's more often the most junior person in the room, because that person's dealing with it and kind of has fingertips on keyboards and is making this work really happen. And when they explain it to me and kind of give it in kind of, especially able to articulate it in pretty much in layman's terms, for a lot of us was necessary. That's the precision that I was always happy with and happy to see, and happy to put those people in that spotlight, right? In those sessions, those working sessions, those, think about, whether it's a process review session or a UAT session during a system transformation. It built a lot of confidence in the entire group to see and know that there's somebody that can talk to that level of detail, to that level of preciseness, if you will, because that just builds trust, confidence, and a kind of a warm feeling around, hey, there's a lot of underlying activity here, and we've got somebody who knows about this. So we say, okay, why, why does precision matter? I mean, I think it's kind of a little bit of a no-brainer here, right? But where you've got a focus on precision in certain processes or aspects of processes, right? There's alignment, right? And if you've got, if you do find yourself in the case of the top left picture here, right, where you're a little off center, is that that you have the ability, right, to go root cause that issue, go find out what went wrong, and then ultimately fix it, and make it better going forward. And again, when I think about these things or talk about these things, it's not everything, right? It's not every nuanced defect out there, right? Because there's absolutely got to be a balancing here of effort and impact, right, to what the outcome is. And so it's key that we're always kind of in the, always want to have in the back of my mind, the back of your mind, what can really move the needle here from a P&L and or working capital perspective. And so let's spend our time on those things. So kind of pivot a little bit. Most of you probably recognize on the left is kind of Maslow's hierarchy of needs, right? And I was thinking about this, and it kind of hit me around, how can I relate this a little bit to the finance world? So if you look at, on the right, those bottom three, right? Balance sheet, P&L trust, attestation assurance, where you have, public companies and C-suite individuals are having to sign off on financial statements, and then kind of confidence and management reporting. I'm not saying those things are easy. Those things always happen seamlessly, because they don't, right? We know that there's effort, there's work that happens with all those. However, for most companies, they've gotten pretty good at this. And with the occasional blip, right? Books are being closed in 4 or 5 days for the most part, maybe 6, 7 at quarter end and year end, and then you've got your variable or your variance analysis going on. But for the most part, those bottom three, I mean, that stuff happens. It doesn't happen without its challenges at times, but that happens. When we get up into the sub-ledger, general ledger certainty, and the start to end process alignment, that's really kind of in my mind kind of next level differentiating understanding and capabilities when we think about a finance organization, an accounting organization, GBS organization, fill in the blank, right? Is that when we have a pretty comprehensive understanding of what in the subledger has the ability, right, to drive some improvement in P&L and working capital, right? Are there things there? In some cases there may not be much, but I say in most cases, in what we're working on, there's a number of kind of go-to spots there that, hey, let's go dig into this bit a little deeper, because we've got some experience here. And by the way, this isn't going, this isn't a scratching of the surface and kind of digging an inch, right? Sometimes you got to get, you're going to get dirty, right? And you're going to get elbow deep in some of this stuff to understand it better and see where the real opportunity is. But kind of that you think about that self-actualization level, right? That's what we're talking about. Really having alignment across your end-to-end processes. So as we all know, right, processes everywhere, right? There's a lot of tasks. If you go back and think about that person sitting in the stadium, can't see the middle of the field, right? There's a lot of tasks that are out of sight. And quite frankly, probably for not bad reasons, right? Kind of out of sight, therefore, out of mind, right? As the saying goes. There's a lot of stakeholders here. There's a lot of functions, siloed systems that impact this, relatively speaking, top line source to pay process, relatively speaking, pretty easy, right, to understand. But underneath those colored chevrons, there's a lot of activity. And not just a lot of ownership and accountability and kind of siloed, maybe metrics and KPIs, but we know, again, in this source to pay example, there's not just one path through these things, right? You can see the different types of spends now, different types of spend here, but, and you look, there's different inputs, there's different processing steps. The output at the end of the day may be some sort of a settlement, right? Some sort of an offset for intercompany, some sort of a payment, and the rest of it. But getting there can be very different. And that's why this idea of getting deep and precise relative to how do these things actually work and where the opportunities are is really important. So let me kind of pivot a little bit to the systems here. Again, many of you are probably a lot like Dan and myself have been involved in system transformations or kind of add-on or plug-in systems. And we take some pride in making that decision and then being part of the work that goes on to get that system deployed and up and running. So we tend to have kind of a high degree of confidence in the fact that it's working as intended and working well, and that then we get this kind of false sense of security that everything there is kind of that's the way it is. That's kind of the gospel, if you will, around the transaction activity. And in many cases, it's not taking into consideration practice, behavior, past experience, because there's workarounds to this in the previous system, the previous kind of customized environment. And so making sure that we kind of keep a critical eye. I mean, it's kind of the trust but verify, right? But keep that critical eye on the systems, and I'll just say, hey, since my subledger equals to my general ledger, which by the way I always should, right? But that doesn't mean the subledger is 100% correct and accurate, and it doesn't mean it shouldn't be. It's above, it's kind of above reproach, if you will. And so another, and this is more of a for me much more of a personal experience example here around having my priorities, my team's priorities being driven by I'll say we say audit observations here, but I kind of think past defects, past material deficiencies, right? And that those things over time kind of built up a layer of activity that just never went away, and quite frankly should have, because of the mitigations that were put in place and should have been put in place. But the reality of it is, taking a nice hard look at why are we doing these things when we think about kind of having to prioritize activities and being able to kind of carve out time and effort to go look at things like subledger detail is, are there things here that have just been a function of history and a function of experience that stay in place when they may not need to be. SOX key controls, a lot of times in that Sarbanes-Oxley world, those key controls got put in place years ago, never to be dusted off again, but to be just followed because they're there, because they were there once.
It's an interesting point there, Steve. I mean, one of the obvious things is you tend to assume when you talk about blind spots that obviously you kind of expect, well, audit's going to find those, right? And it seems to me that we've noticed that these blind spots aren't found by audit, internal or external, and people explain to me that the reason is that the audits mostly, particularly in the past 20 years, mostly focus on ensuring earnings are not overstated, and anything that might be an understatement of earnings is less important. Is that your view?
100%, absolutely. Yeah, it's very, since you think about it, just by nature, it's very risk averse business, right? It's like, hey, we want to minimize or eliminate downside. Upside doesn't get kind of the attention that maybe it should or could. So you're 100%, you're spot on there. So just to kind of wrap up kind of my bit here is and I think we can all relate to this, right? Is that kind of what you see in the mirror may not be the actual activity or actual reality of what went on, but and a lot of times I think of accounting functions, finance functions as hopefully much more than this in these days, but there's still a perspective out there that kind of accounting was a scorekeeper, right? And they should know everything that's there and embedded in those numbers. But the reality of it is, right, there's a lot, as mentioned earlier, there's a lot of business activities that are happening out there. Think of receiving in 400 different locations. Sales orders are being input all over the world, and there's FP&A individuals that are analyzing results and performance kind of daily, right? That's happening everywhere. And so my closing kind of message here is, we can't go to the core of the earth, right, on everything. But as we start to uncover some things or start to, determine some places to maybe start digging a bit, that there's definitely items, and our experience tells us that there's definitely places that are well worth the effort and well worth the dig and well worth getting a little bit dirty to uncover the goodness that can be manifested in P&Ls and working capital performance.
That's a great point, Steve. And that little picture on the left about the apple, it always makes me laugh that we look in the mirror and we think, yeah, that's a full apple. And this is almost like the cognitive bias we have about these assumptions. But actually, there's a little bit apple, there's been a bite out of it. We don't know. We just assume it's a full apple. And that complexity reflects, I guess, some of that.
Yep, absolutely.
So thanks, Steve. We're going to, I've had a couple of messages. I appreciate, I forgot to tell you, you can ask questions during this session. So there is a question panel on the GoToWebinar interface, and you can pop your question in, and we'll answer a few of those at the end. And there's some people who worked it out and coming in already, which is great. But so you can ask your questions, so pop some in now. So while you pop those in, so I'm going to sort of bring some strands together here from what Steve's talked about. I'll bring back to this picture. So Steve's made a very, very clear assertion about this piece about blind spots and stuff out of sight, out of mind. And to bring you back to this image, it's cloudy out there. And whilst we might have a picture, it's an accurate picture of what we see, it isn't complete. And I think that's an important thing. And it's all about things aren't always quite what they seem. And I don't know about you, but whenever I see an image like this, I can't unsee it. But it's kind of weird with this idea of an optical illusion. We've almost got the accounting illusion that, your brain attempts to interpret and organize conflicting information, and it results in us having a perception that's not objective reality. And it's, that is the reality. That's what we're talking about, right? And it's it kind of seems like kind of funny, but it's true. So you've heard these quotes before about known knowns and known unknowns and unknown unknowns. I think the challenge is what we think are known knowns about our business operations, because this is about business operations, which we're trying to turn into kind of common sense in accounting. What we think are known knowns often are not. They're assumed known knowns. And that's the important thing. Let's be sure our known knowns really are known. And that's where a lot of the blind spots are. And the unknowns, we've got to work out that as well. But our biggest risk is this false sense of security. And I'd come back to this great image that Steve shared. We've got to identify the blind spots before you work out what the impact is. We've got to know where they are. And sometimes it's obvious, but often because we've got in the habit of avoiding them, sometimes you need to create a stimulus for that to happen. And I'd suggest the way to do that is talking to the folks around your organization, not just in head office, all around the place, around the world where these things happen. And you might be wondering why I put my dinner menu up, but that is my reference to stakeholders. So, you can have cheesy humor on a Thursday or steaky humor. But the point is, we're not expected to know everything. We've got to talk to people and understand the real experience, and then we can work out where these blind spots are. So everything we do in illuminating a blind spot, so finding them, first job, then illuminating them, this is going to help us strengthen our financial resilience for all the reasons that Steve discussed. It's going to help us with profitable growth because it's going to help us with cash flow, because we're going to realize how, where those blind spots are affecting cash as well as revenue and cost. And just as importantly, we're going to drive operational efficiency, which will equally affect the others. So that's really, really important. And I guess the value creation opportunity here, and we talked about that right at the beginning, and we call it precision accounting, but it's not a responsibility of accountants, it's a responsibility of all of us. It's about end-to-end process focus, because you can never eliminate blind spots if you don't look at end-to-end. It's illumination, it's continuous monitoring and accountability. And the fascinating thing is, from the work we've done, we're seeing cost savings to a value equivalent of between 0.07% and 0.4% of revenue locked up in blind spots. Now that's, as Steve said, that's not going to cause a restatement, but it's a significant amount of money that you can use for investment, you can use to polish the P&L and balance sheet. It's real money, and it's hidden in stuff we just don't see. So I do encourage you to think about that, and I'm seeing some questions coming through about that already, so I will be coming to those in a minute. And I like to think about this again. It's really important that we recognize this is not an accounting problem. It is a complexity problem. It's a global operations disparate, operations far from our line of sight going on. We don't know every task. We might have standard operating procedures, but not everything goes on 100% to that. So we're trying to create order out of operational chaos. Maybe not complete chaos, but there's an element of chaos. I love that quote about that. Patterns we haven't recognized, that's chaos. So, so the questions for you, and maybe for all of us, is have a think about where are the blind spots in our end-to-end processes and the ones that matter most to you. What's the impact in the P&L and the balance sheet, or the potential impact? How do we improve visibility? How do we illuminate? And how do we increase precision? And then how can you assess the opportunity and put a number on it? That's the key thing. Now, at that point, I want to go to your questions. And as I said, I did ask you to pop these questions in. If you, I'm going to pick a couple of them now, and you can keep putting them into the GoToWebinar environment, or you can drop us an email if you prefer. The ones we can't cover live, because we've got 5 minutes, we will respond by email. So I'll pick one here. Right. So, right, here's one. There's a very relevant one. Can you share some specific examples of these blind spots? Steve,
yeah. So there's, and again, this is all based off kind of my experience and working through, various challenges and the, I'll just give this Oscar Wilde quote real quick. Experience is simply the name what we give our mistakes. So think about these as mistakes. One area, uninvoiced sales orders, right? And that was illuminated not because we're looking for uninvoiced sales orders just out of the blue, but because of some very specific sales orders that we didn't find them go from ship confirmed to invoice status. And so that generated an activity around that and doing that on a weekly basis. Excess and obsolete inventory is another one, right? Is understanding where do we see that excess and obsolete inventory? What can we do to generate some value out of that, even though it's kind of fractional value from what the original cost may have been? But it's more than zero, we'll say, right? We'll talk about, I mentioned earlier about kind of the source to pay process and things that happen in the receiving space that generate themselves or manifest themselves in errors and things that need to be handled. And I think, kind of a final one is around master data. I mean, master data kind of gets put to the side a lot. It becomes by nature a blind spot, I would say. But master data accuracy, there can be a lot of pent up working capital activity and goodness related to master data inaccuracies.
That's great, Steve. And there's one other that was in a discussion recently, which I had not thought about enough, which is damaged or returned goods that have been invoiced, but they're damaged, and as a result, should be something done about it. And they're not. Quite often, these just miss the cut. Now, all of these are examples, but none of these things should happen. But like a lot of things in life, a lot of things that shouldn't happen, our job is to identify them, identify the defects, and fix them and remediate them. So the challenge is being aware of operational realities. So another question, which is kind of related, is why do these blind spots occur in the first place?
Yeah, and I think that I allude to a little bit of this earlier, is this idea around responsibilities, right, in the process are scattered across the organization, right, and not just the responsibility and the accountability, but also the metrics around it and what measures are driving the process, and so and a lot of times those metrics are not aligned to what the end outcome is. So that that's one spot. I think we chatted a little bit about materiality and just the sheer volume of transactional activity and the individual size of these things, like the average size of an invoice or a receipt of a customer invoice or a sales order, is that in and of themselves they're not material, but when they aggregate they can make a difference. And then also this idea of siloed thinking, right? Is that, hey, I'm taking care of my bit, right? I got my bit handled. Whatever happens after that, hey, that's up to you. So the idea of siloed thinking, I think lends itself to blind spots as well.
I guess the interesting thing is in silo thinking, we tend to assume that the other silo will deal with their stuff,
yep.
even if we don't quite know what their stuff is.
Exactly.
So we've got time for one more because I'm conscious of time here. What can I do today to start the process of identifying blind spots?
Yeah, I think, as we allude to a little bit of a prioritization and activities to kind of start to dive into, or maybe do that initial, dig, is look at financial, anything that has financial relevance. Look at the processing cycles or the sub tasks inside a larger end-to-end process, like order to cash, customer to cash, or procure to pay. Is that looking at where do we need to go? Maybe ask a few questions. Then, as I kind of alluded to again in these sessions, these working sessions, let's go talk to somebody that's got their fingers on keyboards, right, and see what they're doing. What is their biggest frustration or issue? Because I think that tells us, hey, there's something that's not being done either upstream or within our process that should be. And then it's a matter of kind of, I'll say, root cause analysis and defect resolution to start to drive a process change. But I think that's where you start. It's like most things, Dan. Like it's got to start with a conversation. It's got to start with somebody portraying interest in this and wanting to understand kind of where they can make a difference.
That's a great point. It's one thing that strikes me as well is that we're in a world where we keep assuming that our end-to-end process is digitized and integrated and everything's kind of trusted. But every one of these processes will always have a very large number of manual inputs or manual judgments, human judgments that, for whatever reason, there's a judgment or an opinion or an input put in. And those are the places, I'd look at those places, well, where does manual intervention take place? Because obviously that's a case where it's inseparative, right? We know. So we are 1 minute overdue, so I'd like to thank you all for joining us. Steve, thanks very much for sharing your expertise. I hope you found it interesting, enjoyable, and even a slight change from your normal Thursday. And with that, you can get back to the really important stuff of finding your own blind spots. Thank you very much. See you next time. Bye.